Good Tuesday morning, Market Chameleons, and everyone join us for the first time. Thank you for coming to the Market Chameleon pre-market show, where we discuss everything Market Chameleon before the opening every trading day. How you doing, D?
Good morning, Will. How are you?
Great. The disclaimer is up for everyone to see if you want to start with the disclaimer.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent.
And with that, let me share my screen here. Okay. And today I think I'll cover some questions we had yesterday at the end of the show regarding the new feature, the option order flow sentiment. And then what I'll do is also, maybe cover a couple other questions people were sending over through the email. And if we have time, maybe go through a trade card idea. And if you guys have any questions, especially if you're just joining us for the first time, you could put your question in the live chat. Will's monitoring them. He'll read them back to me. Or you could also come on the show live. We put out a link there to Zoom. If you click on that link, it takes you to Zoom. Once you get there, click on raise your hand. You don't have to turn on your video camera, but then you could ask your question directly. So two ways you could ask questions. So right now what we'll do, we'll start out first seeing what's trading in pre-market hours. Go over that report, and then I'll move on, I think, with the question we had right up at the end of the day with the option order flow sentiment. And it was one of the reports talking about deltas, the percentage away they based on like strikes percentage away they are from the stock price. So perfect. I'll take that first. All right, so this is the pre-market report, and these are stocks trading in the pre-market hours. We have the most active stocks. We have a list of our biggest percentage gainers and a list of our biggest percentage decliners. We've got 50 stocks that made our percentage gainers list, 43 on the percentage decliners. So from this perspective, a little bit more bullish bias at the open. The only one sticking out, I think Twitter up another 5% after yesterday had like one best day in Twitter history, I think. What was that up, like 30%? Well,
yeah, it was a monster move.
Monster move here. I'll just click on it. And that's after Elon Musk, or 27%, took a 9% stake. And I have to admit, I did do a trade in that yesterday. I did a long diagonal spread. Just figured, he took 9% off the flip, right off 9% taken off the market in the float, and I'm sure he's going to, he's got a lot of followers, so we'll see what happens. But up another 6% today. Let's filter out this list and see what's going on in the S&P 500 stocks. So by filtering out just to S&P 500 stocks, we'll take out small cap stocks, ETFs, leveraged ETFs, any kind of rights or units. So let's take those out, see what's going on in the S&P 500. So I'm going to take this filter here in ETF, drop it down. I'm going to select SPY, which is the S&P 500 ETF. And now it's filtered by the holdings in SPY. And 6 stocks there made the percentage gainers list, only one on the decliners right now. So from that perspective, still a little bit bullish bias at the open, but the list is not huge. Twitter is like at the top of the list. Starbucks, I think, the only one there that's down 1.5%. It was down, I think, yesterday as well. We talked about that. I think that there. What's going on there? Well,
which one was that, D?
Starbucks.
Starbucks. They took money off buying share. They're no longer repurchasing shares. They're going to use the money for employees and new cafe development. I
Right.
think that was
And they're
Starbucks.
right. And I think that, they're maybe looking at their employees unionizing. Is that correct?
That's another item on the agenda for the employees for sure. I know Amazon. It's also a big deal right now.
Right. So did you say you had a question though?
Well, no, Michael, I was reading Mike McCrae popped in. He said Elon Musk, it was announced, is joining the Twitter board this morning. So,
Right. Which makes sense that, being the largest shareholder, you would probably have some influence at this point.
you would think.
Yeah. And yeah, we'll see what, I'm sure he's got already ideas if he took such a big stake in it. So, and look, you could see Twitter with a 40 billion market cap, way behind Facebook. But they still have a massive audience, international. So maybe he's got ideas to make it a bigger competitor to Facebook.
Yeah,
So
I mean, he could almost do whatever he wants. I mean, with the money he's taken off the table, pay taxes and put in his coffers. I mean, he could purchase Twitter outright if he wanted.
Yeah, here's Facebook. Here, 625 billion market cap. So there's potential there, right? A lot of potential. SPY. Let's go here, and I'm going to go to the option order flow sentiment here. And we've been talking about, this new feature already for a couple days now. The question was with one of the reports when we slide down, and this is shown order sentiment based on the delta volume. So it's converting the option trades and taking the volume, interpreting, if there's a bullish or bearish trade based on the rules that we have set, and it's converting that option volume to a delta volume. So a directional, if we use option delta statistics, we could convert it to a delta volume, which would be the directional exposure of those trades. So here we see in SPY yesterday, net imbalance of plus 3.2 million deltas. So let's take a look at, I'm going to slide down here. And the question was here, what are deltas by strike % away from spot price? So to create, when traders, enter the options market, they could get long options that are right at the money, right? Buying calls at the money, or they could get long options or short options that are strikes further away out of the money. And they could be above the strike or below the strike. So if we look at the options chain here, right? So stock was 456. So let's say 457. Here, let me go out a little bit further. So it's 457. So if there are a lot of trades right around here, 457 or above, so this would be, strikes at the money or, within a certain percent, 1%, 2% over here, right? So we put them in buckets. So we say strikes between 0 and 5%. These would be, kind of like all the way out to here, 5%, right? So we put all these in buckets and calculate their deltas. And same thing below, right? We could put it and say, well, below, what's trading below, puts and calls. We put it in a 5% bucket and say, in essence, what is happening with 5% around. And then as you go out further, you could get wings. Now in SPY, 20% would be very far away, right? You'd have to go probably further though. And maybe those 20%, let me see, 13%, maybe trading out there. So what we did was kind of just say, let's put it in buckets and see what's happening, what are people doing in those buckets and where the delta's coming from. So I'm going to come back here in order sentiment. So here it is. So here we see the bulk of the deltas are coming from strikes, like we just showed, that are, between at the money and 5% away, right? So that's where the bulk of those deltas came from yesterday in SPY. And if it's long deltas, some, it's probably on net more call buyers or more put sellers or combination or vertical, bullish call spreads or bullish put spreads. But it's some kind of combination where it's getting a net long delta right there of around 4 million deltas. The ones strikes above it, more short, so it could be more call sellers because it's negative delta, more put buyers, but that's what it looks like to me. And if we come out here, we'll get some more insights. So we see that yesterday, where most of the deltas coming from. The biggest bulk on net selling calls. The next is selling puts. So, and I could see the top 10 here, strikes. So we could see here that just combining this information, and I could see here April 4th, 456 put, we got long 2.7 million deltas. So on balance, if we're getting long deltas from a put, that you'd have to be selling that put to get long deltas, right? Buying a put gets you short, selling gets you long. The next one, April 4th, 456 call, selling 2.3 million deltas. So that would be selling calls. So here you can kind of see the top 10. But if I'm just using this, the combination of, there are more sellers of options here than buyers as far as deltas go. So this to me is saying like there, that probably lots of selling between the kind of the upside and the downside closer to the at the money, so with a bias towards the long side, right? So more sellers of options than buyers based on that interpretation, and they're closer to that the money. Now, if we saw wings, like maybe sometimes, there are stocks, and if we see a big pop here, that would mean that some, not only, we're seeing long or short deltas, but they're coming out from further out of the money strikes, right? Where people could be not only expecting like moves away from at the money, but a very maybe violent move to the upside or violent move to the downside, or it could be the other way where people are selling those wings, thinking that there's no, that it's not probably going to happen. So that's a distribution of these deltas based on how far away the strikes are from the at the money strike or from the spot price at the time of the trade, right? So we're doing it at the time of the trade. How far away were those options from the spot price? The report here next to it, to the right, this is a distribution of the deltas based on how many days are left to expiration. So the short dated options, we put in a bucket less than 5 days. So those are the shortest. So you could see here, the largest deltas are coming from short dated options, less than 5 days, less than 5 days to go. So it could have 5 days, 4 days, 3 days, too, because I think SPY at this point might have options, 3 options expiring in 1 week. Is that correct, Will? Or maybe every day? Do they have an option at this point with expiring every day? Let's take a look. Here, so yesterday, something expired, April 4th. Tomorrow, there's another one that's going to expire. And April 8th, there's going to be another one. So you could see they're listing more and more options with expirations, all over the place at this point. So coming back to this order sentiment, what this is showing us is that the bulk of the deltas trading yesterday were in the very short dated options, less than 5 days to go. We do see a little bit of a pop here for 30 to 60 days out, which I would probably at this point, I don't even know if that's intermediate anymore or long term. So many people trade that short term, but 30 to 60 days out, people are starting to get long some deltas out there, which is, between a month and 2 months. So hopefully, I don't know if there's a follow-up question to that, but that was right up at the end of the day yesterday.
No, but Mike did pop in and say thanks. That helps. So thanks for coming back, Mike.
Yeah, definitely. So that's how we're just breaking it down, the distribution of those deltas, right? So this is how far away this, based on how far away the strikes are from the spot. This is by expiration, how many days are left to expiration. Here we break it down by size. So small retail, professional, and institutional. Here we just break it down by call buying versus selling, put buying versus selling, vertical spreads. These are the top 10 by contract. Obviously, there are a lot of options in SPY, so they all add up, but these are the top 10. Here we see in the chart how that delta progressed throughout the day. All right, so that's the breakdown. Another question I did get, we put on the unusual option volume, we did add the sentiment here. It's bullish, bearish, and the net delta on balance. Now, in order to do that, and this is already a very crowded, table, there's a lot of data. We always got more requests for data. So we took some of the columns that we had here, and we had to put it somewhere. So we put it over here, volume by moneyness, and we added those down to here. So what you have here is the number of call trades versus number of put trades. So remember, it's not the volume, but the number of trades. So you could have one trade with, 10,000 contracts, or two trades with 5,000 contracts each. So these are the number of trades. This here is the volume, the percentage of the volume of the calls, percentage of the volume in the puts. So we have the total volume here. And then if we just wanted to get a breakdown of the percentage calls versus puts, it's down here. And then you have the total notional dollar value traded in calls versus total dollar notional value in puts. And look, this is also good information. I put it out here because the order sentiment breaks it down more. And we talked about it. I think we're doing a webinar with Interactive Brokers on what date is that, Will?
It's next Tuesday.
Next Tuesday.
Second Tuesday of every month. So that would be the 12th this month.
Right. And when we talk about, when people look at options and trying to figure out what's going on with the options, and the breakdown we're doing, I think gives you much more insight with better accuracy, because just looking at 99% calls, okay, but what does that mean? People interpret, well, 99% of that means people are buying a lot of calls. That doesn't necessarily mean that. Could be call spreads, could be a big seller calls, big buyer calls. It could be, combination of lots of different things, called butterfly calls. So you don't really know, it's just telling you the percentage. So it's not very reflective. And that's why we added, when our algorithms reading, trying to interpret the best we can what we think transpired. So the volume alone doesn't really tell the story as well as what we're trying to break down. Call notional, put notional. It's good in a sense, but it doesn't also tell you the story. And we'll talk about that more on that webinar. But again, what does a big call notional really mean? Because here in SPY, I'll show you really quickly, and this is why we turn to the delta. And here's SPY. Here's SPY. Here's a bunch of trades here. Let me go out even further. April 8th. Let's see if we can find So here are a bunch of trades here. Look, all these in the money, right? Here's 8 contracts, $86 option, it's 20% away, 370 strike, right? Then I got 66 contracts here, $56 on a 400 strike, 27. So you could see here, all these are very deep in the money, but the notional value is different. As you go in deeper, the notional value is different. But does this mean these 8? Does this mean that there's twice as much bullishness than this 46? Not really, because these options, they have a 1 delta. They're going to move with the stock 1 for 1. So even though you pay more for this in notional terms, it doesn't really reflect that much. That doesn't, if you buy 8 of these and sell 8 of these, it's really a delta neutral trade. But in notional terms, it's going to look like you got a lot more, a lot more debit in there. So that's why what we did was, when we move these, this has it's breaking down those trades more into deltas, taking out noisy trades, really trying to filter out the trades where we have a higher degree of confidence, where we think this is what transpired. Okay, but you still have these over here. So those were questions I was getting over the email. And I think somebody said, well, I don't want to tab like this. So what we do is we allow you to have, look, you could, if you have a bigger enough screen, or, this is my laptop, so I wouldn't be able to show you, but if you have a big enough screen or 2 monitors, which a lot of people do, you could have 2 tabs, on each screen if you wanted to see both, or you could just see this one, right? But so you could have multiple screens up. And anyway, these, you'd have to refresh these screens, because they're not just updating for you. You'd have to refresh them anyway. So that, I think those were the top questions I had, Will.
Perfect.
Huh?
That's great.
Yeah. So let me see if I have enough time.
You got about 8 minutes.
All right. Let me go back to SPY. I think I had a question on the trade ideas, trade cards. So I'm on SPY, and here on these trade ideas, these are coming from our different option screeners. So we have all these different option screeners here. And when you go to the option screener, you could filter out and your own trade ideas based on your own parameters, right? We have made a lot of videos out there, and people have their own ideas, how to filter it, and over time you're tweaking it. So, and a lot of people use those, but some people use our preset filters as starting points. And that's what these are. These are using those option screeners. And when things hit our preset filters, we then generate these trade ideas to get you started, right? So if you go to, let's say bull put spread, you have all these different filters you could use to screen out, right? You have all these different filters you could use to screen out a bullish put spread. To get started, we have these presets, that you could read about, and if you click on it, it will filter out trade ID, it'll filter out these bullish put spreads, and you can see up top the filters that we set. Those are in orange. Okay. So when this happens, right, there could be lots of different trade ideas coming from different screeners in a symbol. So I'm going to go to SPY right now, and the default is it shows the top three by theoretical edge. So what the theoretical edge is, it's taking the market value, comparing it to a option pricing theoretical model based on, it's our proprietary models. We use historical data, stock behavior. We make different adjustments based on the situations, if there's earnings, dividends, stuff like that. And then it compares the two and looks at the difference to produce a theoretical edge. And then this win rate here, historically, what it's telling us, if we look in history, so for example, this long call, right? What this win rate is saying, that if we looked up in history and looked up the stock behavior in SPY, given the amount of days left to expiration and how far away the strike is, that 56% of the time to be win, it was above $4.04, 44% below. So it's kind of like a IV rank. Think of it that way. How many times did it finish above 404 and below 404, given the same circumstances we're seeing today? Okay, so that's what these two things are. So if we wanted to kind of see, what other trade ideas pop up, you could use this, or you could do any. So any is just returning from all our preset filters. So you could go down, see the different strategies, the market value, theoretical value, win rate, and, go through this. There's a bear call spread if you're looking, popular bull put spread. So this one has downside cushion, 10% edge. So this is, the strikes are below. This is a popular one. So if you click on this options chain, it'll take you to the options chain, populate the legs of the strategy, and let you research it further. So now I'm on the SPY options chain. It goes to that expiration, which was April 20th. It populates the two legs, buying April 443 put, selling the April 447 put. All right, so that's over here, selling the April 447 put, buying the April 443 put. It populated that for us. You load the strategy. It gives you the payout diagram at expiration. Right, so you could see anywhere in that green area, if the stock closes there, it's profitable, you keep the credit. And if it drops out, breaks through that strike, it's a loser, but you're stopped out. That's the put spread. If we want to see historically, what was the average historical end price? That's this versus the market. That's the edge. And that's using a dynamic model. So we're right up like 9:30. I'm going to kind of stop there, but we covered a lot today.
We had one question about the trade cards from Robert. He's asking, do you or Dimitri have a rule of thumb for the type of idea you start from, i.e. 10% edge with a 70% risk success rate?
Not really. I don't think it's a rule of thumb, because it just depends, the outlook that I have at the time or that I'm forming, and it's just kind of a starting point. But there's really no rule of thumb. It's just looking at, well, or how are the markets lining up? Is there a lot of edge in certain type of strategy, and like why? I have to figure out why. Is there a reason for it? Is it just that the markets moved away from, their historical mean? So it's just kind of starting points to see, is it in the downside and the upside and at the money? Because that edge is giving you information, right? It's information. It's kind of like the market's handicap, and why are they doing it, and why is it so far, away from where we usually see it historically. But no, there's really no rule of thumb.
All right, perfect. With that, thanks so much, Dima. Great job.
Yep.
Mike was very appreciative of answering his question today. Remember, if you have any questions, you can always email us, support@MarketChameleon.com. I did put the link to the IBKR webinar next Tuesday at 2. with that, Dima, great job. Have a great day, my friend.
Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you tomorrow.